Sanlam Investment's project that the Kenyan economy will expand 5.3% this year, driven by good rains that will anchor the agriculture sector, less restrictive monetary policy globally, and a strong currency. Economists at Sanlam Investment say they expect the shilling to face less pressure this year following the increase of the benchmark lending rates to 12.5% and lower interest in the US.
I mean, monetary policy rates are much higher than what they were. So if there is a slowdown in the economy, we could see significant interest rate cuts. I think the key point of this slide is there's significant headroom for central banks to cut interest rates if there's a slowdown in the economy. And that could be supportive of asset prices. I think the outlook for Africa is looking better for this year.
The reason as to why we think the magnitude of the depreciation will be much less compared to 2023 is the fact that we've seen our central bank being quite proactive by raising interest rates in the country. What that does is that it improves, the real return of fixed income securities in the country. And the thinking behind that is that we should see, interest from foreign investors in our government securities. And when we see that interest, that will mean foreign exchange, coming into the country, and that could really help, try stabilize the Kenya shilling. In terms of GDP growth, our view is that GDP will be in the region of 5 to 6%. And that positive growth will generally be driven by agriculture, which we expect to do well, again, given the good rainfall that we've seen. However, the depreciation of the shilling is what will, which was in last year, is what will probably might hamper growth of the economy. But by and large, we expect positive growth driven by agriculture and the good rainfalls that we're seeing.